Okay, Everyone's video on Tuesday, the 27th of July, 2021. Just coming up to 3:52 p.m. Chicago time. Do hope you are doing well. So in today's video, I wanted to respond to an email question that I got from Bill. But before doing that, let's just recap where we are on a couple of charts I was showing you last week on Friday. So the first one is copper. At HG, the 2300 tip bar chart, and I was long copper after we had this nice little signal here and broke into an uptrend. It's the usual triple signal where we get exhaustion by bullish divergence. That's volume momentum. Blue professional bars coming in at the lows, and we break the trailing stop behind those blue professional bars. That's there. And we're also oversold because better sine wave is showing the background here where we are oversold, and so we're looking for long trades. So got into this trade just above 430, and it was a nice runner. So that was holding for 3 or 4 days. As soon as the blue professional bars kind of came in on Monday, I was out of there. Didn't get out at 460, got out at like 459, something like that. And we had a little bit of jiggery pokery ever since. I think that's just initial profit taking by the professionals. I don't think the uptrend is over by any means, but for me, that's enough of a signal to kind of get out. Didn't want to sit through this junk, and it was a nice little winner for me. So I'm out of that copper trade. Crude oil, still in my crude oil long trade. Again, similar kind of setup. Exhaustion sell, bullish divergence comes in. The background is printed red there, so that's an oversold condition. And then we've got some blue professional bars kind of come in, and we break above the trailing stop there for a triple signal there. So got into this trade, really like these blue professional bars kind of coming in at 70 here. What they've done is they've kind of bought everything in the stack at that point. So that kind of level around 70 really has to be protected and held. And I know we're going through this little kind of consolidation phase, but what this should do is bust out of this and break to the upside. And I don't know where it might go, but you know, next level up is kind of 75, 76. So holding that long and hoping for kind of big things out of crude in the next couple of days. And then the last one is Bitcoin, because we had some explosive action on Sunday on Bitcoin. Always look for Bitcoin on the weekends to do some unusual things. All the other markets are shut, and I think all the traderholics kind of go to the Bitcoin market and kind of decide to trade in there. Again, we had a triple signal kind of lining up here. We'd had a exhaustion sell. Bullish divergence had come in a while ago, and so this was another kind of exhaustion signal down here. And we had all of these backgrounds printed red, which was showing an oversold condition on better sine wave using price alone. And then as soon as we broke above the trailing stop for the blue professional bars, bang, at 31, we had our triple signal go off here. And then we had a really nice little stair-step trade. And I think on Friday's video, was I talking about that? Where, you know, I liked this. I would have preferred them on the lows of those next couple of bars down for a classic kind of stair-step trade, but it worked out. As soon as we busted above the highs of that, we were away. And so blue professional bars into the 40 levels or just below, and then we busted through 40 again. We're in an uptrend here, and we're not going to have a reversal trade until we see exhaustion buy and bearish divergence come in, breaking below the lows of the blue professional bars and so on. So we're nowhere near that, although we're showing an overbought condition for the time being. I think, yes, a little bit of profit taking kind of up here at 39.40, obviously. I mean, this was a massive move from, you know, 30 to 40 is a 33% move in Bitcoin. So there's kind of going to be some profit taking up there. But the highs and lows of that long range kind of blue professional bar sequence is really important. If you think of the blue professional bars kind of buying the breakout there at 35, 36 as being kind of critical, that's a level they're going to protect. And then blue professional bars kind of coming in at the highs at 39.40, just taking profits, because that's a good place to take profits from maybe, you know, getting in at 30 down here. But look for that kind of level 35.5, 36 kind of to be protected and held. And what I'd really like to see is on a little bit of weakness, just a blue professional bar step in for another stair-step trade where we kind of trail this up. But anyway, that was an explosive move in Bitcoin kind of set up by this trade here. So there we go. Those are the three charts I wanted to talk to, just as a little bit of a recap. But let's respond to an email question that I got from Bill. So let's go to Bill here. So this email came in two parts. First one kind of, I think, at the beginning of the day, and one kind of later in the day. And a little bit garbled, Bill, but anyway, let's just read some of these points here. Any chance you can do a video on how to trade a day like today? This is the 27th of July. My experience on a day like this is the indicators say we're oversold over and over again, and when signals fire up, you jump into the upside and get run over. Meanwhile, anyone playing the downside is making the best gains they've made in the last 2 or 3 months. Well, I'm not sure that's so true, Bill. It's like, yeah, it was a fairly decent range day today, but there've been better days in the last 2 or 3 months. Anyway, is it a mindset, or is there days like this where we will lose, but they are rare, or do you have a way of jumping in on this type of action that I'm not understanding about how to read the indicators? And then later in the day, do you trade these arrows in a day trading strategy? To me, this could be one of the ways to not get blown out on the wrong side like today. If I had taken some of the crosses on priam like the downside, or the trend color changes from red to white under the priam white line, I would have captured a lot of the downside move today. I took every one of these trades in the afternoon. Every one of these trades in the afternoon. And as of 2:30, I've made back 40% of my losses from the morning. If you don't trade them, or don't trade them exactly when they fire, could you talk about what your thought process is when you take them, or how you use them in a video or an email response? Whew. Okay, Bill, yes, I will try to respond. Let's look at the 500 tip bar chart for today's activity. So, this is the open of today at 8:30, and note a couple of things. We kind of stair-stepped down today, and every time we kind of stair-step down, we have blue professional bars kind of come in here and here. We stair-step through these lows, even lower. Blue professional bars come in. We come in a couple of points below this low. Blue professional bars kind of come in. More blue professional bars, we kind of run down here, and then finally here, just after 12:30, the blue professional bars kind of come into lows and reverse. So, yes, Bill, today was a difficult day to trade because of this stair-stepping down trade, and it seemed like there were a couple of kind of false signals. But let me just show you. From the close of yesterday, we had our triple signals, 2 of them here, overbought, blue professional bars. We break through the lows of blue professional bars. We've got exhaustion buy, bearish divergence, and a flush pattern up here. So from the close of yesterday, which is the yellow dotted vertical line here, we have short signals going on. And overnight, we have a big kind of move down. We rally back quite a bit, but we don't have a reversal signal at that point. And then so beginning of the day, we start our move down, and then the first signal that we get after the open, which is about 35 minutes later, we get a down signal here, a continuation of that downtrend. Then over the next couple of bars, we get 2 reversal signals. But if you're looking for a reversal trade, you need some kind of extreme pattern to it. Either we will have like a capitulation type volume and a V spike reversal where the market will kind of go all the way down and come all the way back quickly because it's capitulated, and psychologically it's gone to an extreme and reverse to another. Or we go through a situation where, again, we make an extreme in one kind of direction, and then we test and test and test, and then we go the other way. So we're either looking for a very quick kind of turnaround after some kind of capitulation volume, or a testing phase before a reversal of trend. In these two situations, we tested back down at this point here and tried to go the other way, and we never made it. Then at this point here, we came back down to kind of test that level, and there was no signal that would hold the market and kind of help us to reverse at that point. Look at the difference between these two patterns and this one here. We do a short covering rally, which shows that we have got an extreme volume on one side of the market. So all the kind of capitulation short volume here. We immediately get a reversal, a strong reversal at that point. This is showing exhaustion buy, bearish divergence. That is a short covering rally. We've just pushed out a whole bunch of volume because we've moved quickly to the upside, and they got in way too late into this move, thinking the market was going to continue down. So we've just got a whole bunch of traders out of the market at that point, and then we come back down and we have a classic stair-step trade. So there we go at this test at this point here. Blue professional bars kind of come in, and then we race away to the upside. So I only took one trade today, but I was long 70.75 and then rode it to 86.75, kind of up here. So the difference between this kind of bottoming pattern here is we have a couple of things going on. First of all, we did cause a short covering rally, which made a whole bunch of volume have to reverse or get stopped out of positions. And then we tested back in, and that test held. The two signals that we had earlier on in the day didn't have either of those kind of criteria. We didn't have a lot of confirmation when we came back into this trade here. We kind of broke through those lows, and that's when the blue professional bars, maybe, yes, they're trying to hold it at that point, but again, we don't get a flush signal there. We kind of race away and so on, but it kind of fails and quickly goes down through here. That, as soon as we've broken through those lows, that's an excellent kind of reversal trade. We know that that has failed and that we should be going short at that point. But there's something about these two emails where they're a little bit all over the place. And I'm going to tell you a little story from my own experience over the last couple of weeks, which might be a little bit of, I'm not sure it's an analogy or allegory. It's a parallel between what I see in Bill's email and the experience I had a couple of weeks ago. So, and it's a surfing story. So let me tell you this. This is Kealia, which is a beach south of where we stay on the island of Kauai. It's one of my favorite beaches, absolutely stunning to look at, and the waves are beautiful during the winter months. During the summer months, it's a little bit kind of junky, gets a lot of kind of onshore breezes, but it's challenging and it's fun to surf, and I like kind of surfing. I'm not a great surfer, I'm a competent surfer, but I was out a couple of weeks ago. It was late in the day, I'd been working and doing stuff, and I wanted to hit the beach. Got down there about 4:30 in the afternoon, paddled out quickly, and a set kind of came through. Took off on my first wave, and as I'm taking off, to the left of me, I see a very, very good stand-up paddle guy, Hawaiian guy. I don't know him, but I've seen him at the beach a bunch of times. And he was on the inside of me. He'd taken off kind of way over here on my left-hand shoulder. I was going right and heading in this kind of direction here. And all of a sudden, I see him out of the corner of my eye. And I think, holy shit, I'm dropping in on an extremely experienced Hawaiian surfer on a stand-up board, and I just lost it. I fell off my board pushed out towards him. I don't think it hit him or hit his board just as well, but I was totally embarrassed by the whole thing. I should have seen him, not taken the wave, just left him to the wave. Anyway, I paddle out to the lineup. He takes his time. He kind of paddles back out. I paddle towards him and apologize profusely for what I'd just done to him, which was a rookie error and just rude. And he's mad. He's mad at me. Hawaiians, there are a group of Hawaiians who are like super easygoing and like laugh everything off. There are other Hawaiians who are less super easygoing and a little bit, kind of, they don't like the Howleys acting like idiots out in the waves, which I was doing. And he just said to me, "You were over anxious." And he paddles away. And he was so right. It was 4:30 in the afternoon. I wanted to be out catching good waves, and I just paddled into the first wave, not looking around, not paying attention to all the people who are out in the water with me, not being calm, taking my time, taking the right wave, taking off at the right spot and so on. And he just said to me, "You were over anxious." And he was spot on. And there's something about Bill's email today where it's got that element of you were over anxious. You were trying to jump into a couple of reversal trades. Reversal trades are all about showing the market that you're right and the market's wrong. You know better than the market. So whenever you're taking a reversal trade, always think to yourself, am I doing this because I just want to prove myself to be right? Or am I taking this trade because there really are good signals to show the reversal is in? Remember, reversals either is going to happen as a V reversal straight back up, or it's going to take its time and press back in and test until it reverses. So a lot of times, probably 2/3 of the time, it's the latter type of reversal. And so you've got time to wait for the confirmation, for the stair-step trade like this. There's no reason to jump into a reversal trade quickly. And when you tend to jump into them really quickly, it's when you're trying to prove a point that you're smarter than the market. And that's when you get kind of taken out. So there we go, a couple of comments on that email from Bill. Bill, apologies if you think that was a harsh response, but I think it's one of those things we should all be able to try to be less anxious when we're trading. It's like make sure we're always trading with kind of stops and targets in place, reduce the amount of stress, just be sensible about things. Don't jump into reversal trades until you get a little bit more kind of confirmation of what is going on.